The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So LMAX Group is a London-based fintech company that operates multiple exchange trading platforms, including LMAX Digital, their crypto exchange. Earlier, I had a chance to speak to LMAX Group CEO David Mercer about his latest $300 million raise at a $1 billion valuation, his thoughts on Solana amid the network failure, and competitor Binance being ousted from the UK by regulators there. We kick things off by talking about his crypto markets outlook. Have a listen.
So hopefully we're squarely in crypto already. We launched LMAX Digital in 2018. It was the fifth of our exchanges. The other four are foreign exchanges based in London, New York, and Tokyo. So basically the thesis was actually created for us by our biggest FX trading participants. So they were trading crypto on many other venues, and they came to me in 2017, knocked on my door and said, David, we need some institutional grade architecture. What does that mean? We need efficient price discovery. We need technology that doesn't go down. We need low latency. And we need depth of an order book. That means we can exchange risk with like-minded participants. So that was really the starting thesis to build the institutional trading venue. I'm pleased to say in LMAX Digital today, we do ADV, average daily volume, in case you never heard that terminology before, of $2.5 billion a day. As a group, we trade $30 billion a day. So,
looking at the crypto markets, what made you interested in diving into digital assets and the trajectory it has in terms of growth in this sector?
I guess my answer was a little bit too lengthy, right? But I think, look, crypto has the potential to revolutionize the whole of capital markets. It does that mainly through payment channels. So the problems in traditional capital markets are payment, settlement, and reconciliation. The blockchain technology can improve that, as indeed will DeFi, right? So within my FX world, believe it or not, it takes T+2, so 2 days to settle fiat currency. Whereas obviously with Bitcoin, Litecoin, Ethereum, XRP, you can settle instantaneously. So that's going to be the difference in capital markets. And for us, listing BTC USD was just a natural extension for us from listing EUR USD, or Euro as everyone else calls it.
And you're putting Bitcoin on the balance sheet,
sure.
Correct?
But I mean, I don't buy and hold. I happen to hold some Bitcoin, but we also hold balances in 15 different currencies. So Bitcoin is just a 16th, and Ethereum is a 17th. But I'm not a long-only investor. You know, we don't sit naturally long of Bitcoin. We just match buyers and sellers. That's what LMAX Exchange and LMAX Digital does.
Tell me a bit about your foray into DeFi, and are you also interested in the NFT space?
NFTs, I must confess, I don't know that much about. I bought my first one, which happens to be a picture of myself yesterday. So CryptoPunk, that's exactly it. Look at my Twitter profile, Mercer David. But yeah, so we don't know much about that space. For me, that's not an institutional product, but it's certainly interesting. You know, I'm interested in art. DeFi, I think, has the potential, again, to transition the whole of borrowing and lending in capital markets. People talk about these buzzwords like yield farming. That parlance has been around for years as stock borrowing and lending, or repos in traditional capital markets. I think the real key there is the ease of utilization of your balance sheet. Whether it be you, Christine, whether it be the largest institution in the world, posting your balance sheet, what do I mean? Posting your assets on a blockchain, putting them to work, lending them out to someone else, earning a yield on that intraday, so even every 8 hours rather than waiting till the end of the week or the end of the month, could be immensely powerful for every institution and every individual in the world. So we're big fans of DeFi. The only way a centralized exchange can contribute to that is by contributing to an oracle, which is the way you're going to value the smart contracts in DeFi. And we're very pleased to be one of the founders of the Pith network, built on Solana. And we contribute our FX pairs and our crypto pairs to the Pith network today.
Speaking of which, Solana experienced some network failure. Did that have any impact on your product, on Pith?
Has an impact today. It doesn't have an impact, I don't think, in anything long term. I mean, all of these things are computer science experiments. You have to expect, some tech issues from time to time. Today's a big issue. One of those particular days, it's not particularly big, I don't think. It happens that it's at a SALT conference, but it's natural, and I don't think it will affect the trajectory of Solana and Pyth network at all in the long term.
Okay. I think you linked it to a web page that went down for you. It doesn't impact things in the long run, but
look, if you look at all the retail platforms out there, they get a hard time at certain times when their platforms go down. Nothing worse than trying to trade and not being able to trade. In the institutional space, you cannot do that. So we haven't had a down second in 7 years. I have a status page if no one believes me. So of all my exchanges, that shows our uptime. But look, it's technology. Things go wrong, especially these new experiments such as Solana, such as Pyth. There's going to be teething problems, as there were with Bitcoin back in the day, as there are on these retail platforms out there. But you should expect it.
Some would argue it's not sufficiently decentralized, and that's part of the problem.
Which bit isn't?
Solana.
Is anything as truly decentralized as we talked about, for example, in the first white papers? I don't know if that's the case. Is anything really decentralized? Decentralized means that you don't need an LMAX or you don't need an exchange.
Bitcoin is really decentralized because anyone can open a node, and it's very well distributed in comparison.
It's also supposed to be anonymous. It's also supposed to be trustless. Look, the biggest venues in the street, the biggest traders today aren't anonymous, and the holders of that asset aren't anonymous. So, people can argue all they like. And by the way, I believe in the premise of all of this, right? But, and I've been saying this out there on the panels, we have to be pragmatic. You have to have a pragmatic approach to get to nirvana. You can't go from the world of fiat plumbing payment rails today. 99.9% of the world today is still fiat. You can't go from that to decentralized and anonymous instantaneously. You just cannot. So we need to be pragmatic, all of us, with these computer science experiments.
So you recently had a $300 million raise, putting LMAX Group at a $1 billion valuation. Tell me a bit about what you're going to do with that money. Where's the trajectory for LMAX Group?
Well, look, we were very pleased to announce that in July this year. Basically, JC Flowers were the investor. I'm very pleased to have them on board. Their humility, their courtesy, their experience and expertise is unparalleled. Their connectivity should allow us to accelerate our growth in both fiat and crypto. It was completely a secondary sale, so no debt added to the balance sheet, so it's just to accelerate our growth. And our goal is to be the #1 FX exchange and the #1 crypto exchange in the institutional space within 3 to 5 years.
And so when you're at the SALT conference, you're talking to hedge funds, you're talking to various accredited investors, PE, funds and such. What kind of conversations are you having with them in terms of, are they interested in cryptocurrencies? Are they interested in that part of the business?
Oh, sure. I mean, they're all interested in crypto. Everyone has to be interested in crypto. We all need some of it in our portfolio, whether it's you as an individual, whether it's you as a pension fund or an asset manager, or even a private equity fund. I said to you earlier, there's $110 trillion of assets under management today in the world, asset managers, wealth managers. If you put 5% of that at work, right, you're going to have a valuation of crypto at around 5 trillion. Today it's worth 1.5 trillion. So that tells you where it's going. So everyone has to be interested. The biggest blocker for all of them right now is credit, right? And again, I'm going back to the pragmatic approach to this new asset class. All of those players you mentioned want to go through traditional plumbing, networks, and connectivity, right? They want that credit intermediation. And normally that credit intermediation, certainly for funds, is via banks. So that's the blockage for institutional money right now. We need, as an ecosystem, the banks to come. I believe they are coming. I know 10 of them today take market data from LMAX Digital. But that's the blocker, and certainly everyone is trying to work around that issue right now.
And just one last one. I wonder if another blocker happens to be risk. And we see that with a crypto exchange such as Binance, which is having trouble in the UK. They're being told they're not authorized to operate there. Is that boosting your business in a way? And I say that looking at Binance, which has made a name for itself breaking down walls first to create its own cryptocurrency on their own token on their exchange. They're into NFTs. They're building innovative products, but at a price of perhaps building without asking for permission. And I wonder what your exchange has done to differentiate itself, and has it benefited from Binance?
We want everyone in the crypto ecosystem to thrive. There's different approaches out there, and certainly the retail platforms have taken a different approach. Personally, we work, LMAX Group and LMAX Digital is very heavily regulated, right? And we operate just in the institutional space. So we believe regulation is a good thing. We like to understand the framework and work within that. We believe that's the way that crypto can grow and will grow. Now, there's some teething problems right now in the US, for example. Is it a security? Is it not a security? Right? Is it a loan or is it not a loan? Right? But let's sort out what the products are. Let's sort out, are they financial instruments? If they are, then which bucket do you fall under? Which regulatory regime? Is it the securities regime? Is it the banking regime? In the UK, I'm regulated as a MTF, multilateral trading facility, and as a broker.
So are you benefiting from the fall of Binance?
I'm not here to talk about any competitors, and I couldn't even talk to any potential fall. What I would say is, if you operate in a jurisdiction, you've got to make sure you have the appropriate regulation. We do, and sometimes we can't operate in jurisdictions because you don't have the appropriate regulation. But everyone's going to work through it. I think it's very early on. It's very new for a lot of these players, and genuinely, I want everyone in crypto to thrive because we need the ecosystem to grow.